Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, March the 16th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each day we get together in the go-to session to take a look at the market, macro to micro, take a look at the structure of the market. And then we drill down to our trade levels, our targets, and our main hypotheses for the day. We do create multiple hypotheses, not to try to hedge ourselves. We simply do that to have a plan in place. Then we watch what the market is doing, who's in control, and then execute the plan that fits what the market is doing. That way we don't have to think about it in real time. We have a plan put together with our targets and our levels already set to go. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do this all live in the go-to in the pre-market session, then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so Fed day yesterday. So let's bring up the chart. Our main hypothesis yesterday was a move down to close the gap, come down and test the range of the prior day, maybe dip down. We were looking for responsive buyers, or initiative buyers, I should say, down here between the 65 and 62 level, and then we were looking and we were targeting our main target above, which was the 77, 75, 78, which was the naked close and the naked VPOC coming into the news. We actually, I thought we might find balance here or down here coming into the Fed before we made the move, but we moved up. We got above the key line in the sand. Once we got above the key line in the sand, what did we say? Above the key line in the sand, we don't want to be looking short. We want to be looking long. And what did we do? We went up to 74.50, came right back to the key line in the sand. Okay, went sideways, and then on the news exploded up. Okay, and then we just kept on stair-stepping up all the way up into our next trade out level. Missed it by 2 ticks, that 88 and a quarter, and then rotated back in to this distribution zone. Yesterday was a trend day, so the value area does not give us much guidance today, but we do have a bit of a double distribution. I'll be watching this LBN here at 74.50. Currently, overnight, we went up to the overnight high of 88.75, so we did get to that 88 and a quarter target. We just got there in the Globex. We did have news today. We had news at 8:30. We had foreign securities purchases, 6.2 was better. Building permits was slightly less than expected, but Philly Fed, unemployment, and housing starts were all pretty good, and we didn't really get much of a move off of the news. 10 o'clock we got JOLTS jobs. 10:30 we got natural gas, and then that's pretty much it for the day. And then tomorrow we've got the manufacturing sales. We've got the G20 meeting starting, and then we've got preliminary University of Michigan consumer sentiment and inflation expectations that will be coming out. So still have some news this next 2 days. Let's just take a quick step back and take a look at the market in terms of where we are in the trend on the different time frames. I always start my day taking a look at this chart. I use a 9 EMA, 20 SMA. I'm looking for the strength of the trend through slope and separation. I'm looking where the trend is being challenged, any candlestick patterns on the different time frames or continuation patterns. On the monthly, beautiful multi-year upward trend, challenge at the end of 15, beginning of 16, took it back, came up, put in a rising 3 pattern on the monthly. We talked about this pattern when it was happening, and talked about the fact that we're likely to go put in new highs. What do? We We push up into the 2401 on the March contract, the all-time high on the March. That is adjusted down to the 2398 on the June contract. We still have unequalized, what I call an unequalized high between the June and the March contract. That should be equalized at some point in time, but the key here is we are nowhere near violating the upward trend on the monthly until we get down below 2240. In fact, that we're trading 2384 and a quarter tells me that I don't think we have to worry about violating that trend right now. Going on the weekly, we were one time framing up. We did break the one-time framing on the weekly with that low at 54 last week, but so far we've held it. Our low this week was 54.75, and of course we're coming up and we're trading above last week's high right now. Last week's high was 80.75. That's going to be a key level to watch today. Just writing that in my journal, and you can see that price is paralleling the 9 pretty nicely, and we've got good slope, good separation. The trend is very much up on the weekly. The news, instead of the Fed rate yesterday tanking, what do? It's baked in. We rally on the news and trend up all day. Going to the daily, you can see that we had put in this FUBAR, Mr. Sneaky. And this is my paper money I use for my homework. And it says 2397.75. It's not. It's 2398 on the June contract. But we did have the FUBAR volume spike, a new all-time high, and then we had a Mr. Sneaky with the technical gap. We came down on the technical gap, closed it against the 9, closed it against the 20, and then we bounced, and we're moving back, and we're starting to get slope. We don't have a lot of separation right now, but we don't challenge the trend to the downside right now until we get below that 71. 71, remember yesterday, was our key line in the sand above, and we held it once we broke above it. Going to the intraday, you can see that we do have a nice strong trend showing right here. We do have a bit of a technical gap, and we did get a FUBAR Mr. Sneaky technical gap based on that news. Now, as I mentioned in the room yesterday with the gold FUBAR Mr. Sneaky that showed up, is on news. You have to discount this particular setup because of the fact that it's news generated. And what does news do? News revalues the market and the perception of value. So you're not, even though you get the spike and you get the inside bar and you create the technical gap against the 9, you've got to be careful on these because they can very much continue to go higher rather than play the pattern out. So the trend is still up. We do have a bit of a technical gap. A move to close the technical gap will take us down to the 2379.89, or more importantly, what's the last week high? 2080.75 was we want to watch on that. Going to the 1 hour, you can see that we've had a nice strong trend up. We're losing slope and separation. We came down and tested the 20 and bounced. Now we're below the 9 and coming into what is likely going to be a bit of a sideways day or just a rotational day if we hold below the 9, and as this comes down and we get a MA squeeze, MA hug, and then we get our decision whether we get a bounce and continuation or a break and the start of a possible new trend to the downside. Going to the 30-minute, you can see that we've already started the rollover. We've got a cross of the 9 against the 20. So we have a possible start of a downward trend on the 30-minute. Going to the 15-minute, you can see that that accelerates, and we've got slope and separation to the downside. Watch above at the 85. If we can get above the 85, then I'd be targeting up into that high of the overnight session at 2388.75, and then the next big destination above is that naked VPOC up there at the 93. Going to the 5-minute, you can see that we were in a nice downward trend. Now on the 5-minute, they're challenging that trend, and they're trying to get above the 9. And again, there's that 85 level. If we get above that, we can look for a continuation. There's a naked cross that we put in at the 86.25 on the 5-minute. Write that down in your journal as a target if we get above that 85. All right, so taking a look at the big picture. All right, so we came up and we created this longer time frame balance where we had the microcomposite VPOC, the most traded price, going back to February the 21st, down here at the 60. We talked about this last week about coming down to the 60 area, coming into the news. They came down there, but then, they rotated up and we came into the news just a little bit higher than the 7-day. The 7-day VPOC shifted up to 67, so you've got migrating value, price acceptance moving higher, and we came into the news in around the 71 area, 72, which is a break above the longer time frame. You can see on the black outline here that the value area for the longer time frame is the 72. Now we're back in above in this 3-day microcomposite where the VPOC is 78.25. We're now trading above that. The 88.25 target we were looking at got challenged last night, and then we failed off of it. And we're coming back down. So we're inside of this distribution with the most traded price down here at the 77, 75, 78 area. So if we don't hold this 81, I'm looking at the 80.75, last week's high. The target would be the 77.75 CHVN and microcomposite VPOC, which is right here. And then the support's going to come in at that 72, 71. I'm watching the 70.50 area. There's also a LVN from yesterday at 74.50. We'll take a look at that on the smaller time frame. But anything below 71, then you're targeting the 67.50 and the 60 area again. But if we can hold above the 74.50, which is the LVN from yesterday's trend double distribution, then expect the continuation, and the next big target above is the 93, and that 93 is the VPOC from this particular day here, which was the March the 1st. And you can see if I bring this profile to the front, you got a little bit of a distribution zone above the value area of this 3-day profile. So taking a look at the overnight session. Oops, wrong way. Do it this way. So let's talk about some daily ATRs. Currently, right now, the overnight low is 77.75. So let's put that in. So our 20-period full session daily ATR is running at 1544. So our upside daily ATR target is sitting one tick above that naked VPOC from the first, up at 93.25. Our overnight high is likely not going to get challenged since we're trading right at the VPOC here at 88.75. 2 ticks above that trade level that we were looking at 88.25, which is the microcomposite value area high of that 3-day blow off top. So the 20-period daily ATR at 1544 puts our daily downside ATR target right down here at the 72. Just above what is going to be my key line in the sand. We have this LVN right here at 74.75, so I am going to be watching this right here. as a trade level and we get below it, then I'm going to be targeting that daily downside ATR target and a move down to the 71 area, which was our key line in the sand. I'm going to make it at the IB from yesterday, and it's going to be our key line in the sand below. So we're looking for opportunities to buy the dips down to these 70. But if we get below the 70, then we don't want to be looking to the long side. We want to be looking for the target of the 67.75. I'm losing my voice. Excuse me. Then watching that 65 area, 65.75. And then targeting 62, 75, 62, and then that 60 area. And the 60 is the microcomposite VPOC. And then our next trade level, 54.75, that would be the low of our week, and below that. Now the weekly ATR is the 20-period weekly ATR is running at 40.9625. So off of the weekly high, which was put in overnight at 88.75, our weekly downside ATR target. We have 2 days left. Our weekly downside ATR target is all the way down here at the 48. And then our upside weekly ATR target is 95.75, and then with 2 days left of trading this week, off of the week open of 2367.75, our weekly critical mass is up here at 98.75, which is just above that June adjusted high, all-time high, and just below the March all-time high. And if we get above the weekly critical mass, then the sellers could capitulate and we could be trending into the end of the week and making new all-time highs. Our overnight VPOC is 84 and a quarter. It doesn't look like it could shift to 84.50, but it doesn't look like it's going to shift much. But right now we have to put it where it's showing us. We just have to adjust it with what we've got another 20 minutes to go. Trade levels right now to the upside. Well, it's going to be the 88 and a quarter to 88.75. There's really not much I can do. We're going to be opening up, inside of range. Value doesn't mean much, okay, from yesterday because we were trending. So I'm expecting a rotational opening. My main hypothesis is we're trending up. The channel is up. So our main hypothesis is an open auction out of range. In range, a move down, and then somewhere between the 82 and the overnight low and the VWAP and the midpoint from yesterday, maybe down to the 74, but I'm looking for buyers to step in here and start walking us back up towards the 93. I don't think we're going to have a huge range day today. I think we get balancing out, but I think the overall trend is still up. Hold on one second. Sorry about that. So our main hypothesis is an open auction in range, a move down somewhere between 82 and 77, maybe 74, looking for buyers to step in and walk us up towards the 93. Our daily ATR target gives us the possibility that we've got range extension up to the 93. My secondary hypothesis is an open auction in range, a push up, a failure to break above the overnight high or a false breakout, and somewhere between the 88 area and 93, finding responsive sellers and then walking us back down towards the 82, chopping around here and then pushing down, okay, back towards that 72 level and closing somewhere down here in the 72 to 74 area. Third hypothesis is an open test drive, come down, tag the VPOC, leave the overnight low alone, and then push up break out, chop around in the 93 area, and then push up into the all-time highs and adjust these highs. And then the fourth hypothesis, which is the lower probability of all this, is a failure to break out of the range, a push down immediately to the 74, chop between 74 and 77, and then fail, come down to the 70, fail here, and then push down through somewhere between 67 and 62, maybe even 60, but that's low probability based on what actually is happening. Quick look at gold. Gold was beautiful yesterday. We've got some major push in gold. We've moved 34 bucks in the last, $37 in the last yesterday and today. That's a huge move in gold. We were targeting that move up into the 1860 yesterday with the break of 1211, and then if we got above the 22, we're pushing and looking for the next big target, which was that 27. They did that overnight, and they pushed through so far. We're trading 1230. Our high over the night, our high of the night in gold is 34. If we're likely to chop around and come back to this 2760 area today and chop between this 34.90 and the 27, maybe even push back down to the 22, but less likely of that. But if we break the 36, then I'm targeting the 39.20 CHVN and the value area of the balance that we're trading in right now, and testing the upside of that balance. And then if we get above that, 42.70 is your next target, and the next big destination above is 45. But we have this up here, which is if we continue this run, even if we get a pullback and continuation, this is an impulse wave up here. So it would be nothing to have a pullback, but if we hold above this 1860 and start our next leg up, the target is going to be up here at 57.50. So just keep an eye on the 36. Keep an eye on the 27 for a bounce if we do come back down here. If they don't hold the 27, look for them to push through down to the 22, 23 level, and then anything below 22 level, you want to target a quick move back into the composite VPOC, which is the most traded price going all the way back to October of 2008. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.